Bitcoin has seen a short-term correction towards 58,000. In today's video, we are taking a look at both the macro and short-term charts, discussing absolutely everything you need to know about this recent correction, possibility for reversal, and so much more. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic start to your week. In today's video, we are taking a look at Bitcoin's macro and short-term price action in immense detail, going over exactly what has happened over the past 24 hours, the recent correction, the upcoming weekly candle close, and so much more. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is what you're interested in, go ahead and join us on Telegram. It is the first link down below. You'll get access to more of this content. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. All the trades we post are detailed, well explained, and have everything you need to execute them and follow them along with precision and perfect detail. You can also get access to our group chats, our general chat, our trading chat and education chat, our news, our help, our daily video, and so much more just by clicking the pinned comment of the free channel and contacting me via my name or these links for more information. Again, if you're interested in joining the VIP, go ahead and check it out. 39 months of trading data, 81% win rate, over 1,000 plus trades. Check it out to join, and let's get into it. So taking a look at Bitcoin, guys, we have seen a bit of a short-term correction here. And look, I will say this was not a perfect correction. We haven't really seen Bitcoin do exactly what we wanted to see. We would like to have seen Bitcoin break through the midline, of course. We would have liked to have seen the market go up, but sometimes the market does what the market does. And in this instance, we did see a correction from the midline. We saw an inability for Bitcoin to sustain above the 200 SMA, which is this blue line we see running through a chart, as well as the dash trend line, which is representative of the exact midpoint between the range high and the range low of the descending channel. That currently sits at a price point around 61,000. Upon the rejection of the midline, we saw a pretty steep short-term correction for Bitcoin as a consequence of breaking below this uptrending diagonal support, which was about a 28% uptrend as per the bounce from 49k, as well as the formation of what we saw to be a bearish structure, the rising wedge structure. We saw a failure to sustain above the trend line, as well as a breakdown of this wedge, resulting in a downtrend, which we are still currently in. The downtrend has taken us to around 58,200 with the potential to go lower. We're going to be discussing what this means in today's video in just a moment. A big shout out to the VIP channel. If you are in the VIP channel, you would have caught that trade with absolute precision. You can see our entry just perfectly after that liquidity wick to the high side. We've caught a massive profit, around 129% on that correction thus far. So a good correction there. We'll discuss more in just a moment. The market data, 24-hour volume is up 56%, of course, as the weekend comes to the end, and as volume and volatility starts to pick up, we do see increase in liquidations as well. So liquidations are up 255%, sitting at 151 million total. 116 million coming from long positions as Bitcoin plummets toward the downside, and 34 million coming from short positions. Looking at the DXY, we are opening up slightly green over here. Not all that much change on the week. Currently seeing the price hold pretty steady around that 103 region. Not too much to say. We do have a short-term downtrend as represented by our downtrending trend line. Of course, if we are able to break above this downtrend, we would then expect the DXY to climb back upwards to 105. Until then, we could see a continuation down to retest our yearly uptrend. That is it for the DXY. Let's move over to the S&P. So the S&P 500 with a very good weekly close, as discussed in yesterday's video. We we're able to close above 5,300. And as you know, 5,300 is a critical level of macro support. If we take a look, ever since we broke out of that macro downtrend, we've been establishing local highs. We established all these local highs along the way, and as we can see, no correction that has occurred during the last, well, we're looking at 18 months, resulted in one of these prior highs actually breaking down. This was the first time that we actually saw a break below a prior high, but thankfully we were able to see that liquidity grab occur, and we're able to see the price close the weekly above that 53k level, resulting in this being nothing more than deviation and the support sustaining. So while we sustain above this support, we do expect macro continuations higher. However, if we fail to sustain above this support, that will be the first instance of structural weakness since the breakout in January 2023 and could develop into a high time frame downtrend. Watching what happens this week particularly very, very closely. That is it for the broader markets, guys. Let's jump into Bitcoin. Before we do, if you are interested in 15% off your lifetime trading fees on BitGet, BitUnix, and BingX, you can sign up to my links down below. Again, this will save you literally tens of thousands of dollars. It saved me well over 6 figures in the last couple of years. I've been trading on these exchanges, so go ahead and check them out to support the channel. If you're a fan of the content, that is the place to be to support the channel. So jump over, we'll play an ad, and we'll get back into the video. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck back into it. So we're going to be starting on the daily. We're then going to be jumping over to the weekly charts, as well as discussing the short-term price action, Bitcoin dominance, and the total cryptocurrency market cap. So let's go ahead and talk about the daily chart. As we can see here, Bitcoin has had a few daily candle closes now underneath the midline, but this is the first real daily candle close we have seen underneath that midline, which has really resulted in a rejection, which has resulted in some significant downward price action for Bitcoin. And it's very important to contextualize what is occurring on the charts rather than just being emotionally driven based on where the price is or what the price is doing or where the price is going. We have to understand the context of which the price action is moving within. In this particular instance, no matter where we are, whether we're up over here, whether we're down over here, whether we're at the midline, we are still within the confines of this higher time frame structure, which we call a descending channel formation. Now, this descending channel formation is inherently a bullish consolidation pattern, meaning at some point, provided the channel doesn't invalidate, we would expect the price action to break toward the upside. Now, there is a chance of the pattern invalidating, and we'll discuss how that will occur in just a moment. But for now, from the overall broader perspective on a macro chart, we would expect the price to eventually climb towards the range high and break towards the upside. Now, with that being said, for us to be confident in that next leg higher toward the range high, we will need to validate a break through the dotted trend line. And we've discussed this in pretty much every single video for the last few months because it's been very, very valid. As we can see historically, the mid-level, the dotted trend line, acts as a major support and resistance throughout the length of this channel. What we have seen, rejections from the midline can often result in breakdowns towards the range low. We saw an instance over here. We even saw an instance over here. We've also seen instances where break through the midline results in directional continuations to the range high. If we look specifically at the last 4 months, anytime we've occupied the range high or the upper half of the channel, it has been a direct movement as a consequence of the break above on a daily chart, the dotted trend line. So if we're going off historical price action, we would not be expecting Bitcoin to go towards the range high or to fill the range between the midline and the range high until we see a daily candle close above the dotted trend line. So if we were wanting to see Bitcoin to go higher, or if you were holding a bullish stance right now, you would want to see a daily candle close above the midline before you really flip massively bullish, because Bitcoin has bounced from a support. It is now rejecting from a resistance. So until we find a degree of buyers stepping back in, until we see that buyers are actually really stepping back in and pushing the price action upwards, it is best to be cautiously optimistic at best over here, and most likely be aware of the possible downside risks. So we're going to be discussing that in detail in just a moment. So what would invalidate this higher time frame pattern? An invalidation of this pattern will be a 1-day candle underneath the downtrending diagonal support of this pattern. If we were to see a daily candle underneath this level, we would invalidate this structure. The reason we say we would invalidate, and guess what, when we say invalidate, we don't see, it's not 100% certain. There's a greater probability than not we would see invalidation. Nothing in trading is 100% certain, but what we can see historically is that we've never closed a daily candle underneath this level. Even on the top side, we've never closed a daily candle above this level. So a daily close above or below these trend lines would represent a data point that is not expected, not standard, not what we have seen in the past, which could act as an outlier and therefore could mark a breakout of this structure. If we were to see it on the downside, it would invalidate this structure, meaning we would no longer expect this bullish consolidation to have that eventual bullish outcome. It would be a downward continuation as a consequence of a failed consolidation pattern, a failure to continue higher. So with that being said, if we were to see a retest of the range high, for us then to expect the price to continue upwards, we would also need to see a daily candle close above the downtrending resistance. Until then, and I want everyone to really make sure you understand this, until then, all price action between the range low and the range high is considered normal, healthy swings between a range high and range low within a consolidation pattern, okay? If we're looking at a horizontal channel, the price action moving between the range high and range low is considered normal until we see a deviation of that pattern, whether it be a breakdown or whether that be a break up. And generally those deviations result in directional continuations. It is the same principle for the descending channel. The difference, we are at an angle, we are slanted. Both these trend lines are pointing downwards, meaning we are in a higher time frame downtrend consolidation for now, meaning downward price action should not come as a surprise. What would come as a surprise is if we actually close a daily candle under. Now, this doesn't mean Bitcoin is looking good by any means. Like we said, we've been short Bitcoin. We were expecting a correction downwards. And if we look at the weekly chart, well, Bitcoin hasn't particularly closed a very confident candle over here. If we look at that weekly candle, we can see massive wick toward the downside, massive wick toward the upside. What this weekly candle really shows us is a degree of indecision. That is what this candle is really telling us. Indecision in the price action. And what else we can see is this weekly candle has actually closed underneath the $60,000 region. And this has been a pretty critical level historically. We can see we've had that rejection. This was the high. We had our deviation from high. This was our top. And then we had our area of our breakout. This was continuation to new all-time high, followed by a retest and bounce, and finally a correction. We are now sitting underneath this level as we speak. And this level actually lines up perfectly with that dashed trend line. So while Bitcoin is sitting underneath this dashed trend line, there is more downside risk for Bitcoin. And we can see on the higher time frame how these horizontal levels we are discussing are lining up with these diagonal levels we were just discussing. So let's move over to the short-term price action now. As we can see, guys, Bitcoin failed to sustain above the uptrend. And we can see over here on this hourly chart, which we'll go ahead and zoom in a little bit, we can see that we have that 200 SMA and midline resistance right over here. That lines up, it goes through this level. This is kind of where that midline is sitting. What we can see is Bitcoin broke down from a rising wedge formation, and we discussed in yesterday's video what that really meant. It meant that there was a period of upward consolidation in price action where volatility was decreasing as we were getting compressed towards our uptrending diagonal support and uptrending diagonal resistance, with a decrease in momentum, which is representative of exhaustion, which is an expression of weakness, which increases the probability of a downward continuation in price action. Do you see how that flowchart works? It is not, okay, we're 100% going down. We have layer by layer, we're adding data points, we're adding information to our narrative, we're building a story, and then that story based on historical patterns, based on market experience, we can come to a justifiable outcome or decide on a possible directional continuation and assign a probability to that based on the data we've actually identified. In this instance, in my opinion, that was enough of information to qualify for a short, and we looked for a continuation lower. What Bitcoin is doing now is it is coming close to a pretty important area of support. Not so much in the short term, but much more importantly on the higher time frame charts. And that is going to be that 58.7K region. So let's go ahead and draw this area of support in. And this area of support is going to be this very small region between the daily closing price of the May 1st correction under 60K and the area of horizontal resistance between the 5th of July and eventual breakout on the 13th of July, which we experienced a few weeks ago. This is a very critical level of short-term support over here, as well as right over here. We've actually gone ahead and dragged it across on this higher time frame chart, and you can see how Bitcoin has just come down and retested this level. So we are retesting an area of higher time frame support over here, in which Bitcoin could develop a reversal from. If we were jumping onto our short-term chart, on our short-term chart, our area of support is going to be a bit lower, and this is going to be our liquidity box. So we're looking for range low retest or liquidity grabs into this region to identify potential reversals developing. What do I mean by all this? I mean that Bitcoin is likely to see some degree of reversal. If it were to reverse, it is starting its reversal pattern from this 58.7K region down towards the 57.3K region. So we would expect a reversal pattern to develop within this region here. Whether that takes us towards that low support and we grab that downside liquidity, or whether we do not do that and we have a strong rally upwards, I would expect a reversal to be developing within this region for that continuation back upwards towards that midline and a possible break through that midline. That is what we are expecting. That is what the move we are anticipating. Now, at what point would we no longer anticipate this move? If we were to see this level of support invalidate, we were to see a breakdown of this level, we would then expect a similar reaction that we saw prior. We lost this level, what do we see? We saw a range low retest. What happened when we lost this level? We saw a range low retest. What happened when we lost this level? We saw a range low retest. And therefore, a loss of this support from what we have seen in the past has resulted in range low retests, and thus we would also expect a directional continuation to the range low at 54,000 as represented by this lower area of support. So to make it nice and simple, Bitcoin is in a short-term downtrend. We are expecting Bitcoin to attempt to reverse very shortly as it is approaching a high time frame area of support. However, Bitcoin has not quite reached its downside liquidity box at 57,000. We could see, therefore, a short-term correction into the liquidity box while we develop a reversal pattern. Only if the area of liquidity at 57,000 is unable to sustain, we would see a directional continuation to 54K as per what we have seen 3 separate times within the last 2 months. If we are able to bounce from 57,000 or this $58,000 higher time frame support, we are very likely likely to see a directional continuation over the next few days towards the midline of the trend line, the descending midline, in which we would likely break through and see a directional continuation upwards for the remainder of the month. That is it for Bitcoin, guys. Thank you for tuning in. Let's move over to the rest of our analysis today and then wrap it up. Bitcoin dominance breaking above its major horizontal resistance. We've discussed this numerous times and we talked about it in yesterday's video. It is a good thing. It is a good thing, but it is also a bad thing for altcoins, right? Provided Bitcoin continues in its macro downtrending channel, we are generally going to see, with the total market cap decreasing as we have been seeing, we're going to see money bleed out of altcoins and we're going to see Bitcoin dominance rise. And a scary fact is, if we look at when we entered this consolidation, look, we entered around the same price. We're pretty much at exactly the same price at which we entered this channel at 58K. Bitcoin dominance was sitting at around 51%, 51, 52%. It is currently sitting at 57%, meaning within the 5 months of downward consolidation, which we are basically at exactly the same price, okay? All we have seen during this consolidation is not Bitcoin get affected, we have actually seen altcoins lose a market share of around 7%, which is cataclysmic for altcoins. It's a massive amount, and we have seen altcoins bleed out significantly as a consequence. For altcoins to start to gain again against a Bitcoin counterpart, we would need to see Bitcoin dominance fall. For altcoins to enter a parabolic rally, we would need to see Bitcoin dominance fall with the total cryptocurrency market cap rising. So there's a lot that needs to happen for it to occur. As we can see, the total cryptocurrency market cap is a pretty good reflection of the Bitcoin chart, which is mimicking Bitcoin relatively similarly over here. We can see the descending channel formation, rejection from the midline, potential retest of those daily lows we discussed, a very clear cut, almost a carbon copy of what the Bitcoin chart looks like. The altcoin chart looking slightly different. We'll get onto that in another day. Thank you for tuning in, guys. Have a fantastic rest of your week. We'll catch you guys later on for the next video and we'll see you then. Bye.